Today is May 6th. I want to look at the trade that I got in, and I was wrong in this trade. I was looking to go short despite having a bullish order block here. Price tapped into. I was recommending to start off with a higher time frame, so let's just take a look really quickly. Although that isn't important right now, but it is important. So we have a manipulation like here during London, and then run up. Taking out these sides here, stage one, run up here, stage two. Also have a Judas swing right here. 930 open, come down into an hourly as well as 15. Order block here. This was all accumulation, um, manipulation, and distribution. Um, they would just continue running up, supporting these fair value gaps here. But what I want to look at is this five, and this is coming into my idea about consolidation. As you can see here, we take out internal range liquidity, sell side liquidity, 5 minute order block here, which was our Judas swing. Also, this is a breaker. We have high or high, low, higher, high, come down. It's this breaker right here. Oh, I'm sorry, low, high, lower, low, come down, breaker, take off. This takes place during a quarterly shift, Q2 shift. We also have a 1, 2, 3, 4, 5 candle run coming down. And then we can also take a look at this here, come right down into terminus within the optical trade entry of this range here. Right, so pretty perfect. Um, so I didn't catch that one. I was away from the computer. But anyways, here we are in the five, and we need to slowly work our way from the 1 to the 5 to the 15 to identify setups. Using the 1 and sub 1 is to identify executions. So we're going into a quarterly shift, Q2 to Q3, and we create a range. Since we're bullish, we want to take the low to the high, measures across. That's our range on the in the bullish order flow. Fair value gap here. Let's just make this a color we can all see. And the second thing that we do is we establish our knowns. So we know we have optical trade entry right over here. And what do you know? That's pretty interesting, right? Second thing we know, we mark out our fair value gaps, which we have in a discount, right? And we want to take buys and discount, especially to a fair value gap and efficiency. We also have a bullish order block here at optical trade entry. This entire block here could be our bullish order block. And we could do our bullish block theory here, which we just simply take this here. So we may want to skip this if not interested. We have that there. We have this one here. Oops. And we also have this one here. Or we could look at this one all the way up here, which we hit terminus. Anyways, that's just my little order block theory. All right, so from this low to high, optical trade entry, fair value gaps. Uh, the next thing is to, let's see what we have here. Buy and discount below 618, which is here. So plenty of opportunities to do that. Identify what time consolidation is forming, quarterly shift. So we started forming in Q2 90 into um, Q2 of Q3, 9 minute cycle. Identify where consolidation is ending. This is a market maker buy model. So I was thinking that we would go short. Also, this is a volume imbalance up here. I was thinking that we'll go short, but we don't get our stage one until here because we take out this market structure shift here. Drawn liquidity, market structure shift. Boom. This just is a classical um, model 2022. Here's the fair value gap and discount. And then we run up, run up, run up, run up, come down. I want to consider this as a stage or anything, but here we accumulate. So we can see this as stage two, maybe on a higher time frame, but nonetheless, this is just accumulation. Okay. So when we're in this situation is how do we know if we're gonna go higher or go lower? One of the things you can look at is where we are within this range. We were in premium most of the time, bodies wicking in discount, wicking in discount, wicking in discount until we get our quarterly shift, and that's when we get our expansion. So you can almost wait until we come to this quarterly shift before we think about taking a position. Let me just hide this. Okay. Looking for bullish breakers, MD setups. So bullish breaker will be a low, high, lower low, then take off. There aren't any clean ones on the 5 minute. Rule 5, identify premium discounts array and sub discounts array. Where do sub discounts array form within parent consolidation? Bearish down closing candles when consolidation is in discount, bullish up closing candles when consolidation is in premium. So what we're saying here is um, premiums up here, discounts over here, and then we have our smaller ranges within each other. And 3 is usually the magic number before we will get some type of expansion. So we have 1 here, 2 here for the slow this high, right within this range. And then we get a third range here, and I'm not supposed to be measuring from high to low, rather from low to high. So we get this low here to this high here, and we're stuck within this range. And then we come out the smallest, second largest, and come down. It's just bullish for the block, run up, and now we're just still coasting within this initial range here, right? And then eventually we come into our quarterly shift. Then we come down again into discount, and you might be saying, well, why don't you get out here? Why wouldn't you have gotten out here? So why we gotta be patient and measure our entries thoroughly because having a 10-point stop loss here would have had us right here had we gotten in that optical trade entry. See? Here. Perfect. And taking this to that volume imbalance, this would have been a 50-point run. If we were to keep a runner on, this is over a 63-point run. Secondly, if we look at the range of the initial consolidation, 1 standard deviation is up here, 1.5 standard deviations is up here. And that's where we go to the T. All right, OT parent consolidation, we did that. That's one of our knowns. Identify fair value gaps, got that. Identify change in state delivery in first and post leg. So that will be this one here. Notice that we don't get a change in state delivery here. Notice that we kind of get one here, but that just forms our second leg. And then, seeing this here and not being in it, I would go long up here. Only for us to run up and then just consolidate and just be in a pickle. So if you were to get up here on accident, you're in discount or premium first of all. 10-point counter run will take you down here. You'd have been stopped out. Also, if you look at what we have over here, this is a bullish shorter block. Price is supposed to come to this bullish shorter block so smart money can get long. You're supposed to come take your orders into this bullish order. You don't take orders outside of this bullish order block. Only take orders into a bullish order block and discount. That's what it's there for. That's the rule. Yes, you missed this here, but you don't have a play. You cannot take a play because you missed it. You have to wait for price to come back. This is where you enter. It can come here several times to get, you know, those participants involved. You only want to get out of this bullish order block if it fails, like right here. And this is 16 points. 20 points is here. That's if you want to chase. Okay. Uh, order block projection theory. Yes, we got that. Identify bullish breaker. No bullish breakers right now. So yes, we get in here, optical trade entry, quarterly shift. This has everything written in my, you know what. But we were juxed by the 1 minute time frame because we're always constantly looking to get in, and this here was just a roller coaster ride. Emotionally, mentally, we have to protect ourselves from that. One thing that we do good at is optical trading entry this. And I did that, and the initial long was right here. I got it in right here. Despite there being a fair value gap lower here. Despite there being a bull short block right here. But it's like, hey, we don't want to miss this run. So let's get in here. You can do that. That's what you're supposed to do. So understand 10-point stop loss will take you to the low of this bearish order block. And then where do you want to take this to? Mean threshold of this volume imbalance. Okay. This is almost a 2 to 3 to 1 risk to reward ratio, 25 points. So now we went up. I just wanted to break even on the day. Did not take profits. Came down. I'm like, oh shit. Now I'm going red again. Let me switch and get into a short position, which we ended up getting right here to make our internal low here. Fair value gap, bull shorter block, optical trade entry, 72. Perfect. Run up. Stage 1, stage 2, reverse. And we consolidate here. Boom. Still within this range here. Then we go from um, high to low. And we make another consolidation range. Let's move this away. See? From here to here. Actually, because one of these wicks, if I'm not mistaken. Wait a second. Yeah, it's from this high to this low. And the second one will be from this high to this low. So we just want, I'm sorry, we want lows to highs. Sorry, I had this correct. And this low to this high. Come on. Boom. Then we run up. Now we're within this range here. Come down. And now we make our third range. And we come down. So after your third range is made, and it's made in a new quarter, and usually we have accumulation, Q1, manipulation in Q2, distribution into Q3. That's how we accumulate, then boom, take off. There's your setup right there. So that's all that I wanted to show. And yeah, we'll just have to do a better job at observing the higher time frame. Okay, peace.